In this video, I'm going to show you a poor man's cover call trade that went very bad. I'm going to have to take a loss. We're going to talk about everything you need to know about how I lost money on this poor man's cover call trade. Stick around. I know you're going to like this one. Let me show you my Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, just like I mentioned in the intro, we're going to talk about a poor man's cover call trade that absolutely kicked me in the ribs. We're going to have to take a loss. I'll tell you what, we had some great trades in the beginning, ended up losing our ass. We're going to have to take a loss. So that's what we're going to do. I'm going to show you that trade today. So let's go ahead and get to this. If you've never been to my channel and you like what you're hearing today, I want you to subscribe to the channel. It's right there. It's free. I come back every single week, show you timely and relevant cover call trades. Try to up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Today we're going to talk about the disaster that is my poor man's cover call portfolio. Now, what we're going to do is talk about Morgan Stanley today. Okay. There's a lot to talk about here. I'm going to summarize it. I'm going to do a bigger picture video about my experience with the poor man's cover call in 2022. I had great success after the market dipped, right? Because now all of the fluff has come out of the stocks. You know, one of my disasters was PayPal. PayPal had fallen from 350 to 250 to 180. And I'm thinking, you know, this is where I want to get involved in PayPal. It ends up falling to 70. Now, when it's trading at 180, I decide to buy a Leaps call option and start writing cover calls. Well, the stock keeps falling. So what happens is our buy-ins, right? We really have to have our game going when we decide to get involved with these stocks. Because look, throughout the years, I had a great poor man's cover call with Bristol Myers, Merck, Cisco, VLO. I mean, I had success with the poor man's cover call. And I'm going to be on record right now. We are going to continue the poor man's cover call in 2023. We are going to double down on the poor man's cover call, in fact. It's not going away. It is a great opportunity to make bigger returns, cash on cash invested. And if you do it right, if your entry points are on mark, then you can make all the profit that we talk about with the poor man's cover call. But let's go ahead and talk about the disaster that is Morgan Stanley. Now, I'm going to talk about Morgan Stanley here. This is my poor man's cover call tracker for Morgan Stanley. Just be brief here. We'll roll through this pretty quick. Remember, back when Morgan Stanley was trading for 89.24, I decided to get involved with Morgan Stanley with a poor man's cover call. So I went ahead and bought the 45 strike. And if we bring up the initial trade setup, this was a good setup. I mean, look at that. The time value portion, right? The difference between the strike and what I paid was a mere 0.28% or 25 cents. I could easily make that back in a covered call. And sure enough, the trade started working. The very first trade I did, the 91 strike, got $2.17. We are rolling. Well, that's when the market kept peeling off. It kept selling off. So Morgan Stanley actually finds itself in the mid 70s. You can see here, July is trading for 76. So I'm really being cautious, trying to write those covered calls that are out of the money strikes. I don't have my strike prices challenged, so I don't have to add to the trade. Well, that didn't happen. This would have been a great trade if this didn't happen. Back on July, I remember it was trading for 76.50, and sure enough, I went ahead and picked the 80 strike. This thing jumps off the charts. And now to buy this back, I had to pay $9.15. Okay. Got $1.01, had to buy back for $9.15. So now the trade is going sideways. It's not profitable anymore because not only am I losing money on cover call premiums, my Leaps option is down. Remember, I paid $44.49 and now it's trading in the 30s. I mean, I can't get out from underneath this trade at this point. So I have to use the Leaps option all year long. So that's all right. We're going to go ahead and do that. Let's take a look at the chart real quick. And I want to show you how this thing is traded. So this is where I start to get involved with Morgan Stanley. And as you can see, I placed the trade and sure enough, it dips. And look where it dips to. That's the 70 mark, okay? So I'm hurting. Now I said, look, I'm going to go ahead and keep this Leaps option. We're going to use this all year. So I write a couple cover calls and sure enough, I'm able to buy these options back, making money. Well, then I wrote a covered call and the stock spikes above 93. And I have to buy the option back. I can't let this go or else I'm going to lose hella jack, right? So I decide to buy it back. That's where I add that some $800 to the trade. Now we're off the rails. Well, Morgan Stanley falls again, and it's catching a little bit of support here, as you can see. And then I write a covered call where I pick the 85 strike. And of course, it rockets. And I'm going to have to buy that one back. I don't buy that one back. In fact, they took my shares. Now, understand it's a poor man's covered call, so I don't have shares to give. So the market maker buys the shares on the open market for 93X and then slaps me with an 85 put option. And I'll tell you what, it was a surprising action. The market maker put me in a dynamic situation where they bought a put option instead of just letting me pay the difference between 93X and 85X. That was a shocker because guess what? Morgan Stanley starts to roam higher, and guess what? Every tick higher, I'm losing money because the market maker put me in a live dynamic put situation. Now, I still can't wrap my head around that, but that's where I'm at because now I have to close the put, right? I have to close the put. So I end up buying the put back for $8.16. And as you can see, this is where I've decided with only 30 days left, I'm going to take a loss on this trade. Now, thank goodness it was on 100 shares or one Leaps call option. So although the numbers look horrible, down 29% cash on cash, I lost $1,100 in cover call premiums. I want you to keep it in perspective. This is one Leaps call option. This could have been a disaster if I had bought 5 Leaps call options. And trust me, I owned 300 shares. I almost bought 3 Leaps call options to mimic the trades, right? Because if you've been watching me, stocks for which I have Leap call options and shares, I usually trade them identically so I can keep all the numbers in front of me. Okay? So managing these trades is very important. The real bit of information I want you to take away from this today is when we get involved in a poor man's covered call, we have to make sure our entry points are spot on. When I got involved in PayPal and Square, disaster. They were going to fall some 50% more. So I'm going to take a serious loss with those plays. Now, again, once the market settled, I was able to make a lot of poor man cover call trades that pocketed me good money. So the important thing here is this. We want our entry points to be as best we can at the moment. And I'll tell you what, I did not gauge the market with PayPal and Square at the moment, and that has absolutely busted me up. Now, in the case of Morgan Stanley, I actually think my entry wasn't that bad. I could have managed this. Even though I get involved when it's trading at 89X and it falls down into the 70s, I'm still managing this trade. I mean, look, I do write 4 covered calls, generating premium, generating cash flow. But then that one trade gets away from me. I have to buy the option back. Now I'm in damage control mode. I absolutely have to try to figure this thing out, but I'm running out of time. My Leaps call option is January 2023. Well, here we are. I'm going to sell this Leaps call option, and when I do that, all of my covered calls are closed. My Leaps call option is closed, and we bag a loss. What's important here is we want to make sure our entry points are on mark if we're going to use the poor man's covered call. Because I'll tell you what, I ran out of time. See, had I got involved in Morgan Stanley with shares at 89, it just traded above 89 last week. So we have this time issue that I have to deal with. And with January 2023 as the expiration date of this leap, I have to take action. I'm going to do it now so I can do a little tax harvesting for the year. And we're going to close the book on this trade. Lesson learned. When you let it go to expiration, the market maker is going to put you in a put situation versus making you pay the difference for Morgan Stanley trading at market and what you got for that covered call. That is the big lesson to be learned here today. Now, what you saw right there was a sneak peek of what I'm going to be sending my members all the time. You know, I am in retirement, and now I have time to do all the videos I want to do. I'm going to talk about so many different trades. We're going to break them down, but you have to be a member to experience that, right? So if you go over to cptdashboard.com, click Upgraded Dashboard. I'm going to give you one free month, but here's the deal. If you do it on this video right now, I'm going to kick down an extra month. That's right. You're going to sign up and I'm going to kick down an extra month once you become a member. Okay? Want you to get into 2023 just like us. We are hitting the deck plates running. We're going to make 2023 as best a year as possible. Tell you what, 2022 wasn't half bad. 2023, I'm excited. And I'll tell you what, members are going to see all the fresh content that's coming from this desk, and I want you to be a part of it. CPTdashboard.com, click Upgraded Dashboard. You sign up today, I give you the 1 free month. We're going to tack on another month if you do it after this video. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.